We've been talking about the AI trade unwinding for a very long time. But you know what else is unwinding? War. That's right. US forces have struck Iran again. What is this doing to the markets? Well, basically, the bond market is falling through the roof again. We've talked about the spread before between long term and short term bonds, and the spread is very thin, which means there's not a lot of money being made. Interest rate cuts are pretty much gone out of the picture. We are talking about 2 rate hikes again, but there's some interesting inflation data from Bloomberg Intelligence signaling otherwise. The AI trade for Micron tech, Nvidia, is falling through the roof because China keeps making AI cheaper, and by America consistently suspending access to latest AI models. Are they losing contracts to European countries as well? A lot of these discussions, plus how Bitcoin is reacting to sailors selling Bitcoin this time, is actually showing us a little bit more strength in crypto, whereas the rest of the AI trade unwinding, that's going to be a very interesting topic to discuss. All in this video. Tune in. Hello, everyone, and welcome to Strategic Markets, your place for technical and fundamental analysis all at once across many markets. Into our midweek session, and honestly, I've told you this multiple times. I don't like starting off with US-Iran war. US forces have struck Iran again after 3 commercial vessels were attacked while transiting through the Strait of Hormuz, and in retaliation, US forces have launched strikes. And they're basically saying that what Iran did was unwarranted, dangerous, and a clear violation of the ceasefire. So we're back into the swing of things. And what did we expect to happen immediately? Well, Brend Crude fired off over here, basically taking out its 20-day SMA and going above, nearly hitting the $80 mark, has come back down, is now ranging $78. And yeah, this is a fairly responsive price action. This is not something we have seen in the last 2 weeks or so. So in that particular case, that was definitely a strong spike. From there onwards, when you look at the fact whether the Strait of Hormuz is technically open while this ceasefire is danger, you can see that it's a highly volatile and restricted situation. Following this fragile ceasefire, it has technically resumed, but because the recent attacks on the commercial vessels have severely disrupted the transit, it's basically stalled all ongoing peace talks. And if you look at this particular tracker over here, it basically says it's closed. And the last 24 hours, 34 ships have gone past through it. But in this particular case, nothing is guaranteed unless we get further confirmation on news events. So look out for that. And look, if this thing does get better in the next, I want to say 24 to 48 hours, then I have to be honest and say things were actually looking good. And why I say that is this particular Bloomberg intelligence chart, known as the USGG BEO2 index. It basically gives us a 2-year break-even inflation rate of the bond market's estimate of average inflation over the next 2 years, right? And this was dropping basically below 2%, currently ranging at about 1.95. What that basically does, in simple terms, the bond market is saying we expect much lower inflation over the next 2 years than we did a few months ago. And therefore, if this America-Iran Strait of Hormuz escalation did not occur, the Fed actually had a perfect excuse to cut or at least be in more of a risk-on situation than to put us back into fear. Because the way the markets have reacted, I'll have Steve talk a lot about the bond yields discussion and how the bond market's basically going to hell. But we've been covering this spread between the 10-year yield and the 2-year yield, and how that there needs to be a strong gap between the long-term bond and the short-term bond for the market to want to signal future growth. If there isn't a big enough gap, then banks don't make money, and faith in the growth of American economy does not bode well. And last time we covered this, we were at 0.45. The spread is thinning down again to just 0.34. So in that particular discussion, when you look at the 10-year and the 2-year yield bond, it's very slight, but you can see that we dropped down to 0.27. We were ranging back up. and now, we're just trailing sideways again. So not a fan of this because it's not good for growth. And obviously, in any volatile situation, like this, I have to say, this Fed Watch tool to predict how many rate hikes is going to happen this year is like one of the most volatile things I've ever seen. Like people get so spooked easily based on things. Like I can still see negotiations happen and things timing down and us not having any rate hikes. And I've made my opinions on that pretty clear. But right now, the market is pricing 2 rate hikes. So however political situations go, it does look a little bit concerning and just something for you to be across.
And this is a really, really great discussion you're actually bringing up here too, because this is showing how quickly this paradigm is shifting all the time as well. Because even last time you were discussing this, it would basically only one rate hike that was basically being discussed from this particular Fed watch. And that chart you just brought up a few moments ago as well. But if you take a look at the actual chart of TLT, I'll bring up the chart a little bit later on, but you can actually see that from TLT, T has actually dropped quite significantly over the last week or so, like we discussed in the last video as well, and you'll actually see it again now. But that actually contrasts quite significantly with that particular chart you just showed a few moments ago with that precipitous drop. Because if that's actually showing that the Fed now has a perfect excuse to cut, you compare that to the chart that I'll show later on, the TLT going down dramatically, that actually is inverse to interest rates themselves, which are actually going up. So you'd be actually expecting more of actually rate hikes rather than perfect excuses to cut. So completely conflicting signals in the overall scheme of this. But anyway, I'll pass it back to you to keep on going with the other discussions you want to go on.
Thank you for that, Steve. And you're 100% right. Geopolitical uncertainty drives a lot of volatility, which is basically what we've been discussing over the last couple of months, guys, that this uncertain aspect is what's basically driving the risk on bullish sentiment that we're looking forward to. And it's giving an opportunity for other competitors of the US to really take advantage of this. Because when you unwind geopolitical certainty and then take away the strongest narrative that America has had over the last 6 to 12 months, the AI trade, you start to see a picture of a little bit more of a risky side. We have been talking about the AI trade unwinding quite consistently on this particular channel, but today I actually have some new statements to show you some proof. Who's our biggest competitor? China. China is popping the AI bubble from many angles. They're flooding the global market with hyper cheap, high performing alternatives that threaten to deflate the hyper-inflated valuation of Western tech giants. We very recently saw this. SpaceX stock came in at massive tech highs and then, ended up trading just a couple days or couple weeks later below its IPO pricing. That was reasonably bubble behavior, right? And how we see it unwind over the next couple of weeks will be a clear indicator. On top of that, DeepSeek, which is one of the Chinese best offers of its AI model, is 99% cheaper pricing per token that Western counterparts like OpenAI deliver. Then on top of that, they do have free tier dominance where you can get multiple AI developer tools entirely for free or at massive discounts in comparison to the US. And then you also have open models that basically you can use based on your own compute power and store your data locally instead of having to put everything into the cloud and then rely on other entities to secure your data. So China is coming into this AI race with cheaper, better security models and giving people open access. And that is taking away a lot of business. Then you look at the AI leadership from the US government consistently suspending access to new models such as Fable 5 and Mythos 5. You can see that companies like Palantir's contracts for AI are consistently being disrupted, if not ended, by the European nations as well. France basically is transitioning away from Palantir's AI data. Spain has directed to go towards state-backed firms. Germany, United Kingdom, they're all consistently pulling away because they're not believing that the US is the best leader to drive this initiative. And that's why when you see price action like Micron Tech dropping, now down 28% from last time when we covered 24%. Nvidia now down 19. You've got one that was mentioned to me by Steve today, known as SK Hynix, coming from a Korean counterpart because how affected the Korean market is recently. This one's down 30%. So the AI trade is unwinding in front of you, whether you like it or not. And there's a lot of concerns happening as to how much they can get a spread on profit margins even with AI. So I just want to take a moment to say over here, if you've liked our analysis of AI up till now and liked the Chinese view and the EU's relations pulling away, please drop us a like over here. This goes a long way to our analysis and how we progress and provide you this information moving forward. But continuing on that, how are other markets within the US affected? Well, SPX right now is indecisive. It's been ranging sideways and it's actually forming a bit of a triangle, which gives it a bit of time to decide whether it's going to progress upwards or whether this is a moment it needs to take a breather. And Russell, in similar relation, has come to this $3,000 psychological level, and it's been ranging sideways as well. Because again, the biggest fuel that it had of AI narratives combined with the fact that the interest rates on short-term borrowing and long-term borrowing are not that great. No businesses are taking loans for further growth and development. There's just not that much liquidity for small mid-tier businesses to want to grow right now. So that's one news aspect. Now, on top of concerning news, another concerning news that came in this particular week is that MicroStrategy, the largest Bitcoin corporate entity holder, actually made one of its biggest sales of 3,588 Bitcoin to fund dividends on their digital credit securities. This is their second sale, and altogether, Strategy now holds still, 843,000 Bitcoin. Here's the interesting thing, though, and here's a little bit of a counter narrative that we've been discussing. When Sailor sold 32 Bitcoin, this is the price action that we had. So when Sailor sold 3,588 Bitcoin, this is the price action that we have. Now, I'm not saying that we're not going to go down from here, because with the geopolitical uncertainty and if the AI trade really unravels badly for the American stock markets, then in that case, it's very likely that crypto goes down with it too, and that we do set a lower low. But in terms of the fundamentals of the market, some of the things that we have been covering, like Bitcoin's bullish divergence, where the price has been going downwards, but the RSI has been going upwards, that's one positive news event. But another thing that I wanted to show you guys today is when the other time that Sailor made a massive sale from just the MicroStrategy aspect, not from the digital credit product, was in December 2022 when he sold 704 Bitcoin. That was a initiated tax loss harvesting purpose behind that particular sale. When was that? Absolutely at the bottom of last Bitcoin bear market in December 2022. So gives you a bit of an interesting perspective that he made his biggest sale, and that was at the worst of the market when everyone was ready to buy. Now, I'm not saying that this is a bottoming signal, but it definitely gives you a bit of perspective that the strength the crypto market has right now, in comparison to what had happened a couple of weeks ago, there could be a bit of a transition happening. And I've talked a little bit about this before, and our last video covered this, about how we might be having a rotation from the overblown AI narrative to now the crypto narrative, and combine that with the Clarity Act that's coming, that would be a reasonable narrative to push the markets upward for crypto. Now, obviously, this is all speculation, but I'd rather have you guys know the insights, because these little triggers is what pushes the next couple of moves. And that's something for you to be across. Now, Ethereum, which is the second in line in cryptocurrencies, not gonna lie, it's absolutely doing nothing. Ethereum is basically reliant on Bitcoin's price action, and Bitcoin's not going to do anything. Ethereum's not going to do anything. But what is interesting is Ethereum's strength against Bitcoin. This is what's got my eye, because Ethereum's strength against Bitcoin, it's actually ranging upwards again towards this particular area of resistance to possibly break out of this particular descending pattern. We'll see that action through, because the RSI is gaining strength as well against Bitcoin, and it's coming to that 70 particular level. So I'm keen on how that particularly goes. But right now, there's a lot of interesting things happening. The AI trade is falling apart. Geopolitical certainty is applying pressure to bond markets, or you could, Steve is going to cover a lot of that in a moment. And then at the same time, crypto somehow is a little bit unaffected with all these negative news events and still signaling some stronger signs. So I'm not going to confidently say that we have bottomed yet, but these levels of strength are sometimes signaling reversals that you might not be ready for, or you might just want to know before it happens. So on that, I'll pass it over to Steve, and I'll get him to share his insights on bonds and referringly the other markets.
Well, thank you very much for that, Yash. All right, so Here we go. As promised, this is the chart for TLT. So looking at the bonds, this is the ETF for the bonds. These bonds here are the 20-plus year bonds, so the large, long-term bonds. And pretty much since we've actually just had that discussion on Tuesday night, because we had a bit of a delay in terms of the last presentation, it really has actually done quite a dramatic reduction in terms of the actual price of the ETF. And the bonds market did actually fall quite significantly overnight. And we really have had that 1% drop. 1%, a lot of people might think, not too much, but it is actually quite significant when it comes to the bond market. And overall, what we have actually had now is a drop beneath the lows here from June. So we're actually now at the lowest point for probably around about a month and a half. So it's actually quite significant overall there. We are well below any of the moving averages that you actually see here on the daily chart for quite some time, and well below the September low here as well. So the bonds here are actually extremely weak at this point in time, and it looks as though, as you can see here as well from the pre-market, we're actually going to be opening even lower in relation to the bonds as well. So essentially, what does this mean? Well, like we've actually been discussing overall, as the bonds continue to fall, the yields themselves, or the interest rates that are associated with the bonds, tend to rise. So overall, that would be generally suggesting more and more pressure on those stocks in particular that do require borrowing overall, particularly, as we said in the last video as well, particularly those shares, say the small caps, that tend to actually require more borrowing from lenders. We'll see that in a few moments as well too. Also take a look over on the left-hand side, in particular the Ichimoku curve, because what you're actually seeing there as well is continually lower highs and lower lows on the lagging indicator being this green line overall here. And as you can see as well, that's actually crashed through the unit price and is actually gone right through the baseline being that red line as well too. So as these lagging indicators cross over those particular type of lines, that's even more bearishness as well too, as it crosses downwards beneath those. Whether it crosses beneath the Tenkan-sen blue line as well, that would give us even more potential bearishness as well under that circumstance there, or potential bearishness. But the biggest factor that I actually take into consideration is the fact that the actual unit price itself is actually now closed beneath the cloud. So that's even more of a signal overall there. Another signal to take into consideration from the Ichimoku curve is actually the fact that the Tenkan-sen being the blue line is actually now about to cross over that baseline being that red line. So there's a lot of signals coming through on this Ichimoku curve. That's the power of these particular type of curves overall there. A lot of people may look at these kind of indicators and say, oh, no, is it really actually showing much at all? These do. That is actually the really, really big important aspect of that. You're going to also see that in terms of the Qs as well in a few moments too. So I'll show you that there as well. So that's the situation there in terms of the TLT. If we take a look at the yields, you're actually going to see the yields themselves actually leaping out at the present time in terms of this morning's actual trade as well too. And that's already starting to show in print on the actual chart itself, as you can see. Now, this is actually happening because those TLT bonds, or in terms of the actual bonds themselves or the ETF, still continuing to fall. And in terms of this morning's trade, it's actually already starting to gap up. So you can already see that the rates themselves are actually rising to a level above those that we've actually seen from June. So we're actually starting to even rival some of those rates that we actually even started to see over in May. So a lot of people are actually already starting to make bets, if you want to call it that the rates are actually starting to rise above 4.5% on the 10-year. Quite substantial increases there. And that's well above the short-term moving averages, as well as the 50-day moving average there being that blue line. On top of that as well, as you can see also on the Ichimoku curve on the left-hand side, the lagging indicator has now looking as though it's actually crossing over that Tenkan-sen blue line, as you can see over there. Now, if that stays above that Tenkan-sen blue line at the end of the day, then that is a confirmed crossover on that particular chart. So just something to keep in mind. And also the same there as well for the Tenkan-sen blue line across the baseline there as well in relation to the daily chart there too. So things to keep in mind. Obviously, that would need to be the case at the end of 6.25 hours away in terms of the daily chart there. So obviously keep an eye on that. So that's the rates. Now, like I was also suggesting as well, this also relates in terms of the Russell. You can see with that, We're actually now testing these short-term moving averages, as you can see, but with that lagging indicator, lower highs and lower lows. So we're starting to really start seeing a bit of a downturn in terms of things. With the Tenk and the Sen being the blue line, the unit price is now closed beneath that. So we're getting more and more weakening signals in relation to that. But the one I wanted to show you in particular, because Yash had been speaking so much in terms of the AI trade in particular, has been interesting aspects in terms of the Qs being a tech-laden ETF. And the reason why I wanted to bring this one up is because of multiple factors. And we were bringing this up as well over the weekend's video, because short-term moving averages, okay, close beneath that. We've also now closed beneath the 50-day moving average, being the blue line. On top of that, we are now currently closing with the lagging indicator beneath Tenk and Sen. That close is a firm close in terms of Tuesday's trade, as you can see. So that's already happened there beneath the Tenk and Sen with the lagging indicator. Tuesday's close didn't close beneath the upper boundary of the cloud. However, have a look at the pre-market. Pre-market's $704.50. The close yesterday was $709.43. So we're actually going to be potentially opening in 45 minutes, pretty much beneath the cloud, the top of the cloud anyway itself. That's the situation by the looks of it there. If we actually close into the cloud, there's a potential also in terms of more weakening in relation to this particular sector, or this particular index. The other thing to really keep in mind as well is that more than likely this Tenk and Sen blue line will probably cross beneath that baseline as well, which would be even further weakness in relation to this particular index. So there's lots of signals coming through on this chart, once again showing the strength in relation to the Ichimoku curve. It's a fantastic indicator and something that I highly recommend a lot of people actually really look into and do a lot more research into if you're not already utilizing it. It's fantastic and can be used very, very well alongside moving averages overall, as you can see. And that's the reason why I show both of them side by side, because they work very well in parallel. So that's something in terms of the Qs. And you can already see as well too that these kind of things as well can actually give us some form of indication of potential weakness, even in terms of something like the SPY as well, which is actually showing a fair amount of weakness as well here too, and a bit of uncertainty overall in terms of what the circumstance is here. And I think it's actually going to be starting to show a bit more weakness as well too, potentially testing the upper bound of this cloud once again, because obviously, as you have seen here as well, that Tenk and Sen had actually crossed beneath that baseline here as well around about a week or so ago. And even though it has actually bounced back up above it, we are still seeing some relative weakness overall in relation to the SPY as well too. The only one that's really showing any strength in relation to all of these indices is basically the Dow, and that's still going along pretty strong. And as you can see, that Tenk and Sen blue line is above that baseline all the way through and has not crossed beneath it at this stage. So the strength there in terms of the relative strength in relation to the Dow Jones compared to the other indices is still going along pretty well. Other than that, everything else that we actually discussed on the weekend is still pretty much basically about the same. So I'm not going to really harp over too much more. Gold still performing pretty much the same way. In fact, if anything, probably weakening a little bit compared to the weekend. The same with silver. So really keep an eye on that one. Because of the mere fact now it's actually turning beneath these short-term moving averages again. Copper starting to weaken again as well, so be very, very cautious there. Overall, this does bode fairly weak for the whole market overall, including tech and everything else with it. So be very, very cautious. When it comes to Bitcoin and Ethereum, we are starting to turn down beneath that particular resistance area from April 2021. So a little bit of caution coming into play here again as well with that, especially also with the lagging indicator coming back beneath the unit prices as well. By the end of the day, see how this lagging indicator is in relation to the Tenk and Sen blue line, which is this line here. If it closes beneath that, that could be a warning signal there as well. So just be a little bit on the lookout there. You haven't got the baseline crossing beneath the Tenk and Sen at this point in time in terms of the end of day here. The warning sign isn't there for that point in time, but that lagging indicator could be a little bit of a concern overall. Ethereum is actually looking as though, like Yash had said, Ethereum seems to be showing a bit more relative strength compared to Bitcoin at this point in time. And you can also see that being confirmed here with the lagging indicator. It's well above the Tenkan-sen at this point here as well. And you've also had a Tenkan-sen crossover above the baseline on this side over here too. And the unit price is above both the Tenkan-sen and the baseline over here on the left-hand side too. So you can definitely see a lot more relative strength in relation to Ethereum. So that is a good sign in terms of Ethereum overall. However, we are still trailing beneath the 50-day moving average on this particular chart over here. And we are also still beneath the resistance line over here from April 2025. So a lot of dynamics at play, as you can see. But overall, that's pretty much about all we've really got going on. Nothing much else has changed, apart obviously, of course, from Brent Crude. Now, in terms of Brent Crude, we have actually seen a bit of a swing up here above the short-term moving averages here as well. So a little bit of strength here. But similar to how we were discussing things with gold and also how we were discussing things with Bitcoin and also Ethereum over the weekend as well, we would not really be seeing too much bullish action from Brent Crude at this point in time until we start seeing higher highs and higher lows forming in relation to this recent bounce. So that's something to keep an eye on here. And the reason why I say that in particular here with Brent Crude is because we're now bouncing our head at this point in time off the 200-day moving average from the downside. So we could be seeing a bit of a retracement coming through here before we actually start seeing some more movement up here. So this could be an interesting aspect overall. But it looks as though we are actually going to be forming a higher high on the lagging indicator, and then may actually come down, and then we'll see how the market reaction is to that. And in terms of USO, pretty much a similar kind of situation here, bouncing off the 150-day moving average here in terms of the support area overall, but we've got the yearly VWAP above, and that could be our resistance area at this point in time overall with that. So a lot of interesting dynamics at play there. The dollar still remaining relatively stubborn at this point, even though we are forming lower highs and lower lows at this point. But in the immediate term, we could actually be a higher high, higher low in relation to that. So bit of a indeterminate trend at this point in time. So watch for higher highs, higher lows in the unit price on the right-hand side overall with that. The VIX has started to actually rise a little bit, but we haven't formed higher highs, higher lows in the immediate term overall. So it's still a watch this space aspect here, and we're still nowhere up near here towards, say, the 23s, 25s at this point either. So not really much change from the weekend. Won't really harp on too much more other than that there, but definitely have a look over what we actually did discuss over the weekend. But some subtle changes about what's going on, probably because of the geopolitical aspects more than anything else. But other than that, really along the lines of sticking with the plan that you actually do have more than anything else. But with that, mate, I'll pass it back to you, and we'll see everyone on the weekend.
Thank you so much for your analysis there, Steve. Like we've discussed, geopolitical uncertainty has definitely kicked in again. And as much as I like to think about it as water under the bridge, it's consistently popping up these days. And combine that with the AI trade derailing, there's really a lot of concern. But with some reasonable strength in the crypto markets, I still hold out hope. But there's also still reasonable doubt that we keep trailing downwards until October for this particular 4-year cycle theorists in crypto who believe that we go down till October before we even consider make our move back up. If Clarity Act progresses forward, who knows? Maybe July to August could be really great times. But on that, we want to thank you so much for joining for today's session. If you've liked what you've seen today, please drop us a like. A lot of work goes towards our analysis. If there's anything we can do differently or anything you'd like us to cover, please drop it in the chat. We'd love to see it. For today's word, let's go with AI derailment. Please put the word AI derailment in the chat, and anyone who makes a comment will give you a shout out on next week's video. Thank you so much, Mark, for your ongoing support. We truly appreciate you. And with that being said, if you have enjoyed the journey with us, guys, drop us a bit of a subscribe. Come along the journey with us so we can see you for the next one. But on that, thank you so much, and we will see you for the end of week session.
See you in the weekend, everyone. Thank you very much.